really appreciate you guys taking the time to join us for this Lily Campbell team buyer webinar. Just to introduce you really quick, not that she really needs an introduction, but to introduce her really quick. Lily Campbell, team lead of the Lily Campbell team. Lily, thank you so much for doing this and providing this content and information for people. But welcome. Please say hello to everybody.
Hi, everyone. Thank you for being here. Thank you.
All right, really appreciate that. And sitting next to Lily is Amie Herrera. Amie Herrera is a loan officer with Homeowners First Mortgage. Amie, welcome. Thank you for being here and sharing some insights with us tonight.
Happy to be here.
All right, guys, to do this buyer webinar, we're going to address some questions out there that we know that we hear in the real estate business, in the marketplace. Is now the right time to buy a home? Will interest rates go down? What will happen to real estate in 2026? We're going to address all of these things, get your questions answered. I know that's why you're here. So we're going to go through that. Before we jump into that, though, I do kind of want to pull back the curtain for you and give you an inside peek into the real estate market, what we see as real estate professionals every day in the marketplace. So I'm going to share my screen with you. And I'm just going to go over some insights, some market prices, where home prices are today, what's the inventory look like, what demand looks like, and then we're going to jump into some questions with Lily and Amie to get your questions answered about, is now a good time to buy a home? So let's start with a market update first. Hold on a second. I'm going to stop sharing my screen really quick and share this. Sorry, I was sharing my desktop, but here we go. All right. So, as I mentioned, Lily Campbell, I'm Jeremiah Seacrest, Regional Manager for First Team Real Estate, and Amie Herrera, loan officers, are the panelists for today. And I'm just going to jump right into the market activity for you and give you a really big, broad snapshot of what's been happening in real estate in Orange County over the last 50 years. One of my favorite slides of all time. There has never been a decade in Orange County where the decade started and the decade ended with lower home prices. Going back to the 60s, this has never happened before. So I know there's a lot of information on this chart and this graph. I look at this thing all the time. But these yellow bars that you're seeing here, that's the beginning of the decade and or the end of the decade. And you can see here, from 1970 to 1980, home prices were higher in 1980 than they were in 1970. Even through the Great Recession, going back here, the Great Recession, 2007, 2008, when the market really dipped all over the country. But when 2000 started versus to where 2010 ended, real estate prices were still higher 10 years later, even though there was a Great Recession that started in 2008. And then you can just see since 2010, coming into the COVID years of 2021, real estate, as you all know, has just skyrocketed. A lot of that had to do with low financing costs, low interest rates, so money was really cheap to borrow. But this is just a really great reminder that purchasing real estate over the long run, historically speaking, has always led to home price appreciation. So, really, what drives the real estate market? I know if you're a buyer or a potential buyer, you're curious to know what really is driving the real estate market. I know that the news and the news cycles today are pretty big, pretty heavy. There's always something going on. Obviously, this last week, a lot of news. But what drives OC real estate? I will tell you, it's not a government shutdown. I know that we're in currently a government shutdown for roughly the last 2 weeks, going on 3 weeks. Government shutdown does not change real estate. It's bad for politics, but not necessarily real estate. However, and Amie can verify this, it does slightly impact those VA loans and FHA loans, right, Amie? It's slowing that process down, right?
It can, yes.
Yeah. But still happening. Things are still getting done. But that's the only real impact that the government shut down. But houses are still getting sold and things are still moving forward. What drives the market, or as a buyer, what you should really be focusing on? Take a look at those 10-year treasuries. I'm going to show you what those are, but 10-year treasuries are really linked closely to mortgage rates. So if the treasuries are going up, most likely mortgage rates are going up. If treasuries are going down, the same. Mortgage rates will be going down. right? So it heavily influences mortgage rates, not necessarily tied exactly to it, but it heavily influences what's happening in the mortgage rate market. Okay. Consumer confidence and consumer sentiment, big pushes on what's on home prices, buyer demand, all of that kind of stuff. What's not coming out with the government shutdown right now is the reporting of these numbers. The next time I think these are supposed to be reported are in November. So if we make it to November and we're still in a government shutdown, that could start to impact it because these numbers, we do require these numbers from the government and from some other reporting places as well. But when the confidence drops overall, buyers get a little bit cautious. I'm going to show you where it's at as of today, so you have an understanding of that. The main thing that we focus on, and the most important really, is supply and demand, right? That's that Econ 101. The more supply, the lower the demand, the lower prices would go, or vice versa. If there's low supply, like we've seen through the last 5 years, historically low supply and extremely high buyer demand because of low interest rates and cheap money, or it's cheap to borrow money. That low supply, that high demand caused prices to skyrocket. And we've seen that, and all of you have experienced that over the last 5 years. That 10-year treasury, if you're tracking it today, it closed out at 4.046, which is pretty steady. And Amie's going to address some of these things later on. But that 4.046 rate today, good news is rates have been fairly stable, right, Amie, over the last probably, what, 7, 8 weeks?
Mhm.
Yeah. So they've been pretty stable. It personally, in the real world, I would love to see them get to around 3.866 to really get a nice low six, high 5% interest rate. Would really love to see it happen around here. You can see going through the Great Recession, rates were down. Coming into the COVID years down here, this is when rates dropped to like 1.2% and a 30-year mortgage was 2.75%, right? Or 3% in that range. So this is really what we focus on to understand where mortgage rates are going. It'd be helpful for you to understand that. Probably one of the biggest things we heard recently was that, well, the Fed's going to cut the federal fund rate and mortgage rates are going to go down. So I'm going to wait for the Fed to cut rates so I can get a cheaper mortgage. And we saw that not happen, right, Amie? I see you're shaking your head no. What actually happened, Amie?
Mortgage rates went up.
Yeah, mortgage rates ticked up a little bit. I think we were floating, correct me if I'm wrong, Amie, but we were floating around 6% and they went up to like 6.25%, give or take.
Right about there. Right about there. Yep.
So that's why we watch this. It's not the federal fund rate. Quick snapshot from today's rates, just from Mortgage News Daily, if you want to follow that. But here's the 30-year fix right around 6.27. Of course, it varies for every individual, how you qualify, what your income, credit scores. We'll get you connected with Amie later to see what you would qualify for. Then there's that consumer sentiment. What has been happening with that? You can see up until from January to April, consumer sentiment was nosediving. What sentiment really means is how people feel about their long-term finances. So how are you feeling about your paycheck? How are you feeling about your savings? Do you think, the stock market will be going up? It will be going down? Do you feel confident that you will keep your job over the next 2, 3, 4, 5 years? Or are you worried about getting laid off? That's really what this consumer sentiment focuses on, more about your personal finances. Uh, After May, it kind of spiked up a little bit. And we actually saw this impact housing where we had a little peak in the number of escrows and closed sales a little bit too. So it adjusted up. But recently, it's been adjusting down. And maybe that'll change. A multi-year war has ended in between Hamas and Israel. So there's all kinds of global events that are happening that can also impact how people feel about their finances as well. But right now, consumer sentiment has been pretty good. It raised, but not as high as it has been in previous years. So that means buyers are being a little bit more patient. When we see this downward trend in sentiment, it means buyers are patient. They're just sitting, waiting, and not jumping into the market. So that buyer demand for the overall market slows down just a little bit. Overall, guys, this is still a great Great market, especially here in Orange County. Going back to that supply and demand, if you want to look at a national level, this was the United States to see how drastically we're off from an inventory level. Again, supply and demand, Great Recession, peak of 2008. There was nearly 4 million active listings on the market. In today's world, there's roughly 1.4, a little under 1.4 million listings. So you're talking about almost a third, a little over a third fewer homes for sale. And that's really what's driven the price. You can see here 2021 COVID, where it really dropped to a historic low. And that really pushed prices up because homeownership and is still a part of the American dream, and people want to own homes. It's still there. What's happening locally here in Orange County, though? The active inventory listing overall, going back to 2004, you can see we've came. This is where we are today. This black line is where we're at today on this chart with the number of listings we had. So as we saw the summer come, we saw our inventory level really start to match some of those more, 2014, 15, 16 eras in there. It peaked up a little bit. We start to see more inventory, more active listings, which was really great. Buyers, maybe if you've been shopping for a home, maybe you saw, hey, there are more choices for me. And even in some cases, we're not having 30 offers on a house like we were back here in 2021, but maybe we're having two, three, four offers on a house, or sometimes a house is sitting and it's taking a while to sell the house. So that's a snapshot of what's going on actively in Orange County. Give you an idea for that. Here's the supply and demand, Econ 101. Today, our active inventory supply, we're floating right around 40, a little over 4,000 homes, 42, 4,300 right in here. The 3-year average before COVID is this top line here. So and these are all COVID years. Historically speaking, we are still well below a typical real estate market as far as inventory. And then on the right-hand side of the screen, you'll see the active listing inventory versus demand. So you got 2025 and 2024 here are the active inventory, and then your dash lines here are the demand lines. Demand has been pretty steady for the last couple years, and you can tell it's pretty flat going across the way. This time of year, demand dips off a little bit because everybody's out there thinking about the holidays. Yeah, Thanksgiving coming up, Christmas, New Year's, all the things happen, Halloween coming up, all the things happening between now and the end of the year distract people from home shopping, but makes it a good time for buyers to buy. So, expected time to sell. What's happening in Orange County right now? The typical buyer out there, if you see a house on the market for over 30 days, you're probably thinking there's something wrong with the house, when really that's not true. It's just taking longer to sell a house. Right now, we're close to 90 days. Average days on market for listings is about 90 days. So it's taking about 3 months on average to sell a home in Orange County. So if you're out there looking for property, you're working with Lily or you're working with Amie, trying to get financed and pre-approved, if you see a house that's been on the market for 70 days, it doesn't mean something's wrong with it. It just is taking longer to get a house sold in today's market. Okay. I'm going to pull back the curtains a little bit more and show you every day what's happening in the market. I'm just going to go through this really quick with you to get through this. But like I said, as of a few days ago in Orange County, we had 4,400 active listings. There was 107 coming on the market. In the last 60 days, roughly 3,600 homes have sold in Orange County, which is really great. The expireds and canceleds, just to give you some terminology, that's how many homes went on the market and weren't able to sell, or the seller decided they weren't going to sell it anymore. It's almost 4,200 people took their homes off the market in the last 6 months, which many people don't realize that how often that happens, but it does happen quite often, especially this time of year into the fourth quarter. Active inventory on the market takes about 74 days. Overall, going back and looking at that 90 days on market is really how long it took those houses that sold to get them sold. Median list price in Orange County for a single family home, almost $2 million. I know some of you might be thinking this is not affordable. Orange County is not affordable. Well, the median close price in Orange County is 1.4 million over the last 60 days. So listing inventory is up compared to last year. Our closed sales are pretty flat, and our pending or houses that have gone under contract are pretty flat. Last year is almost the same as this year. Okay. If any of you are in Huntington Beach, here's what's happening in Huntington Beach. The median list price for a single family home in Huntington Beach, nearly $2 million. That has come down over the last couple weeks by almost $150,000. The median close price for a Huntington Beach home averaged out over the last 60 days is 1.6 million. Our listings are only slightly up in Huntington Beach. I know that's where we're sitting right now in Huntington Beach, but our listings are only up 14%. So a few more options in Huntington, but not a lot more. All right. And for those of you that are in Fountain Valley, I know Lily does a lot in Fountain Valley, and several of you probably are sitting in Fountain Valley right now. The active inventory, Fountain Valley is much smaller than Huntington Beach, but 32 properties for sale. 25% of those properties on the market have done a price reduction. Some people out there, if you're reading national headlines, you might think it's a buyer's market based on a national headline. Fountain Valley still it's leaning towards a neutral market. Still, it's kind of a seller's market, but it's leaning towards a neutral market with that. We'll talk to Lily more about that and what she thinks is going to happen in 2026. Okay, median list price almost 1.6 million, with the median close price of nearly 1.5 million for single family homes in the city of Fountain Valley. Okay, similar to what happened last year. I wanted to share with you guys really quick a meeting slide that I shared with my team. I manage a couple hundred real estate agents in the area. This was a slide that I showed our team in July of 2024. The market was just climbing and climbing, and then we kind of, I asked them the question, have we peaked back in May and June, because in July prices pulled back, right? So we saw this kind of upward and downward trend throughout the year. But have we peaked in July 2024 at 1.2 million? Well, in today, Orange County, you can see I had to put a flashing arrow down here to show you that the line down here is 1.2 million, and here's where we've gone since July of 2024, with last month coming in at 1386 for all of Orange County. Just to give you an idea, we did not peak in 2024. Prices have actually gone up 1.4% year over year compared to the first 10 months of the year. So home prices still climbing. The reason I say this or show this to you is because the national headlines are talking about national numbers, and you might see some areas where home prices are going down, or the news is saying it's a buyer's market. Well, we're in Orange County. It's a little bit different here, so I wanted to share that, what's happening local. Here's what's going on in Huntington Beach. Last month, median price was 1.5 million, and it fluctuates every month, but Huntington Beach year over year is up 4.2% from a price standpoint, so prices haven't come down compared to last year. Fountain Valley, similar story, up 2.3% year over year, so you can see that. And Costa Mesa, I know Lily does stuff in Costa Mesa and surrounding areas as well. Costa Mesa is really a winner at 8.2% year over year in home prices. So the three little cities right here around us have all seen price appreciation compared to last year. Basically, what does that mean for the future? Higher days on market, really stabilizing of market prices. We're seeing that 1 to 3% appreciation. But I do want to throw it back over to Lily. I'm going to stop sharing my screen here, and I just want to get into this conversation about what's going on in the market and really get Lily's take, because she's the expert, and Amie's take from a mortgage standpoint. Lily, let's start with you. The biggest question a lot of the buyers that we hear are asking is now really the right time to buy a home in Orange County?
Okay, my opinion is the right time to buy. Most likely, it should be you feel the right time to buy for your family. You're financially, mentally ready. Then now I'll talk about, and definitely is the right time to buy. The reason is the fourth quarter every year, and normally with my 27 years experience, I see the good deal many times happen to the three months, October, November, December. So you come into the January, February, prices normally are higher than and October, November, December. It's a good time to buy for sure. Then also the seller put a house for sale now, they're more motivated, more willing to negotiate it. So that part I know for sure for 27 years. Obviously, I cannot say every 100 each year, but majority year like this one with my 27 years experience. I think it's a good time to buy. Also, Fountain Valley, Huntington Beach, Coast is a very strong area. The lost demand, you expect it coming down the price. So probably, and every year people hoping next year lower, next lower, and it will go opposite, going high. So now is a good time to buy. Don't wait. Even though interest rate you think is high, later on during the 6-7 years, will price interest rate adjust, you will refinance later. Okay, that's my conclusion. Good time to buy.
I agree with you on a lot of that stuff, Lily. Like you said, sellers are more motivated this time of year. If somebody's willing to have their house on the market through the holidays, Thanksgiving and Christmas and New Year's and show the house, you're right. They really want to sell the house, so they're motivated. I'm going to throw it over to Amie really quick. Amie, everybody wants to know, what does your crystal ball look like? And will interest rates actually go down next year? And how should buyers plan around this?
My crystal ball is a little hazy right now. Interest rates next year, the consensus is that they're going to look a lot similar to what they are right now. We're expecting rates to stay in that low 6% range for the next year. So, you know, I know there are a lot of people out there that don't love these rates, right? They're hearing 6%, and I have a lot of my clients are saying, well, I want to wait till rates come down. And just as Lily was saying, we don't have a crystal ball, but the expectation is that home prices next year are going to be maybe a little higher than they are this year, right? And so what I've been encouraging my clients to do is find the home that you love, as Lily said. Find the home that you love, that fits your lifestyle and that you can afford. And while you may not love the rate today, let's talk about what interest rate is it that you're waiting for. And then we can set, what I do with my clients is I set a strike price, right? I say, okay, so you don't love the rate today, but you love the house. So let's get you into the house and let's have an agreement that when rates come down to say maybe 5.25 or 5.75 or whatever it may be, that we'll go ahead and initiate a refinance for you so that it gets you into the house, and we can have we can set a rate goal and have that in place for you so that you're already in the house by the time those rates hit your dream rates.
Yeah, that's a good plan. I've heard you talk about that before, Amie, setting that rate goal. But like Lily said, and like you just said, if home prices go up and I would also believe or agree with you that interest rates are going to be fairly stable over the next year. Again, we don't know what's going to happen globally. We don't have crystal balls. It was kind of a joke asking you about your crystal ball, but rates will stay pretty stable. We believe that's what all the indicators are doing. But if home prices go up, and even if rates go up a little bit, that means your monthly payment goes up.
Correct.
Right?
Right.
But if you buy now, like Lily was suggesting, if you buy now and rates come down, guess what you get to do?
You're a winner.
You get to refinance into a lower interest rate. Right?
That's right.
I definitely
it's the best of both worlds, right? You're getting the best prices with the opportunity to get into better rates when that opportunity arises.
Yeah. So that brings up really the question, people are always trying to time the market, Lily, and they're trying to figure out this time of year, they're trying to figure out what will happen to the 2026 market. So they're trying to time it, wondering if prices will drop in 2026. What are you seeing on the horizon for next year, Lily?
Seriously, I see next year probably still very good in real estate. I even see the stable balance, possible 1%-3% increase as well. And unless something dramatic happen, the reason is regardless of what the outside state, what the other market, we have a special market here, especially this area we not only have a local buyer, also we have the international buyer. That make a huge difference. So also our land is very limited. Don't have enough land to build it anymore. So we always have the high demand, less supply. Plus, homeowner here have lost equity in their hand. Their mortgage rate is low. They're not in a hurry to sell. So in that way, I will see next year is a very stable year. If interest rate lower, let's say lower, in probably sale price even further higher.
Yeah.
The reason is 1% interest rate lower will increase to 10% purchasing power. So therefore, the interest house can and automatically possibly increase to 10% when you're purchasing the same house today.
Yeah, I think
That's
what you just said, Lily, is really important. You said if the interest rates go down 1%, they could lose up to 10% in purchasing power. It means the prices go up and your payment goes up higher. We've run examples in the office of like house payment versus interest rate payment. And oftentimes prices have to come down 10% to save you that money on the monthly payment. Like, a house has to go from 1.5 to 1.4 or more, under 1.4 versus like getting a 0.25% lower interest rate to have the same payment. So interest rate is important. It's going to be stable, like Amie said, over next year. I think overall the market is pretty stable too, like you said, Lily. But yeah, you know, the horizon of 2026 right now looks pretty stable, right, Lily?
yes, I think
Yeah.
so.
So going into that, for the people that are listening in, curious, they're buyers. That's what we're here for. We're here to address the buyer questions. A lot of them, if they've ever worked with somebody or put an offer in a house, they've come up against competition in the last 5 years. It's been extremely competitive. Lily, what are some of the things that you do with all this competition out there? How are you and your team helping your buyers actually win and get the deals?
You know what? This big topic, I always training our team agent. We work very hard together and brainstorm and polish each other's skill to thinking about how to help our client to win in the high competition, high demand and the place. So first of all, we need to understand the seller. If we want our offer accepted, we must thinking what the seller wanted. Majority seller always want a higher price, not only higher price, also security the term. This term is financially and ready. For example, will qualify the loan. You need to prepare for that for sure. Also enough approved fund. On also your well structured and the offer that our team is doing very well. Okay, I have the 11 agent work as a team. They have a very good skill for this way. I see them and got an offer accepted it. Even sometimes 10 offer, 15 offer, they got accepted it. Even recently, I have 3, 4, 5 offer, they got accepted it. Then third is the most seller often to ask a question, who is this agent? Do you know this agent? They want to buy agent very reliable, also reputable, trustworthy. They even choose agent. Who is the agent present this buyer? And therefore, our team have a long relationship with all the local and the agents. They know we are reputable, trustworthy, honesty, and know how to do the work and make a deal go through. And that is a wonderful our advantage to get an offer accepted.
Yeah, all important. I just want to recap that because you said three things there that were really important in getting an offer accepted. You talked about price, which is always important to a seller. You mentioned in their terms and writing a good, strong offer that's prepared. And then relationships. You talked about relationships. Most buyers don't understand the agent that you work with and their reputation in the marketplace can also make a difference in negotiations and if a buyer gets a house or not. So price, terms, and reputation of your agent, all very three important things in getting that offer accepted in a competitive marketplace, which we still are in this area. You said something about being prepared, and I think most buyers don't know what being prepared actually is. But part of that is working with a loan officer and having all your W-2s and pay stubs in, right? So I want to throw it over to Amie really quick. Lily mentioned this. What is it? How do you help buyers get prepared from a financing standpoint so when they submit an offer, it is a strong offer in the eyes of an agent?
So we do fully underwritten pre-approvals, so that by the time we are handing that pre-approval letter over to the agent saying this buyer's fully pre-approved, we mean fully underwritten, which means the lender is ready to write a check. We just need an appraisal and title work. An offer like that is almost as good as cash, right?
Yeah,
We're ready to write a check. We
you,
just need an appraisal and title work.
can you explain really quickly the difference? Because maybe the buyers don't know, and I've in my career I've found that most buyers don't know the difference of between that pre-approval letter and a fully underwritten pre-approval letter.
Absolutely. When a buyer first comes to me as a loan officer, I take a loan application and I gather their documents, their W-2s, pay stubs, bank statements. Those are generally the basic documents that we need. We often need some additional ones, but those are the basic ones. And I go ahead and work up their loan file. Now, for many lenders, once you get into escrow, then you go through what we call underwriting. Right? So that's when the documents that I've gathered as a loan officer, I then submit to the bank, to their underwriters. The underwriters get out their microscopes and they look at everything very, very closely and go through everything with a fine-tooth comb. And they give their final approval for your final loan approval so that they'll issue the check. What we do is we do that up front. We don't wait until we're into escrow to go through underwriting. Let's let those underwriters get out their their magnifiers and microscopes, look at everything fine-tuned, so that once we get into escrow, it is a smooth process. And we do that not only for our clients to get their offer accepted, but I'll be honest with you, the first couple weeks of escrow, it's busy, right, Lily? You
Yes.
guys are doing inspections and appraisals, and they've got escrow packages to fill out. And so we do that for the buyers too, because it just takes a little bit off of their shoulders in those first 2 weeks. We know we've got the loan covered. We know we're fully underwritten. And so it makes it easier for the buyers, but also helps get their offers accepted.
Yes.
We want to put together our strongest foot forward.
Being prepared is key, right, Lily?
Yes, definitely.
Yeah, you
Well
have to have
prepared.
everything ready to go and do it. So being prepared is an advantage. I want to talk about another advantage that you give your buyers when they work with you and your team, Lily, and that is finding inventory that isn't on Zillow, it's not on the MLS. We call it off-market inventory. And I believe with buyers working with you, that's one of the biggest advantages. You give buyers to access homes before they hit the market. Can you talk a little bit about how you find those off-market opportunities for your clients?
Actually, I do have a more listing than many agents, and many homeowners they're ready to thinking about selling. They start to call me. Some even let me know even in advance. Some even 2 years in advance. So actually, I already know what's going on, which house possible going for sale, and so that's the one. And some seller does want to sell a house before market. I do have this opportunity, not too often, but will have. Every year, our team agent always have some sale because the seller insists they want to sell before market. This is the one. Secondly, we do have First Team's 2,000 agent. They have some before market and off market listing in our First Team's website hosted. We have additional those kind of off market information. And third is we do have cross country those relationship with our different agents. They have some and additional people connection in this local. They cannot handle, let us handle. We have this, and plus I even have the investor. Some investor bought a house or they're thinking about some house they will sell before market. They called me also, or some investor already got a listing. got it. They just want me to see my team agent can possible to sell before they have a hassle to move on with with selling. So I do have a big advantage for the many buyers and in this market,
Yeah.
especially this very competitive market.
Yeah, I think for those of you listening in, she's being extremely humble right now. Lily lists more homes in Orange County than any other agent, so she has access to more information and off-market information than anybody else. And she mentioned the sneak preview system that we have here at First Team Real Estate. So not only does she have access to her own inventory and off-market inventory, we have over 2,000 agents, like Lily said, that we have a system and a process where we can see that information before it goes to websites like Zillow, Realtor.com, Homes.com. So it really is an unfair advantage. I think it's the ultimate unfair advantage if you're a buyer working with Lily, just because of we call it insider information. That insider information may be illegal in the New York Stock Exchange and trading stocks, but in real estate, insider information is perfectly legal if you're a client of Lily's. If you're a client of the agent, they can give you insider information about off-market opportunities. So thank you for being humble, Lily, but I'm going to brag for you because you list more homes than anybody else in Orange County. So finding off-market deals, obviously a super advantage. Other advantages might be strategies for getting a lower interest rate. So I want to throw it over to Amie really quick. And what are some of the creative strategies that you're using currently to help people maybe get a little bit more affordable rate?
My favorite topic. Thank you for that, Jeremiah.
Yes, absolutely.
A lot of really, really great strategies right now. One of the things that we've been using a lot of, especially this time of year, is a really good time, I think, Lily, to ask for seller credits.
Okay.
Don't you think? When you have more motivated sellers, right? Would you agree with that? That this end of the year, great holiday gift would be a lower interest rate, right?
Okay. Okay.
So we're in that low 6% rate right now for well-qualified buyers. And I have a lot of buyers asking me, well, is there a way I can get into the 4s?
Yeah, right.
How do I get a 4.5% interest rate, right? There is a product that's called a temporary rate buy down.
Oh, good.
And we have what's called a 2-1 buy down right now, right? So I'll briefly explain what that means. Let's say we have a mortgage note rate. Let's say we get pre-approved, get into escrow, we lock your rate. Let's say it's at 6.25. If we can do a 2-1 buy down, your first year, your note rate is 6.25. Your first year, you'll be making a payment on 4.25% rate.
Wow.
Your second year would be at 5.25%, and your third year and beyond would be up at that 6.5%. So we would be in the 4% range for that first year. And the way that we do that is we ask for a seller credit. Now, if we were to permanently buy down a rate to 4.5%, it would be very expensive. We'd probably be looking at several points, right? And a point is 1% of the loan. But to get a temporary buy down so that we can get into that 4.5%, 5% range, we're looking at maybe 2% of the loan amount. So let's say we have an $8,000 or $800,000 loan amount, we'd be looking at about a $16,000 seller credit. Which, if you've got $1 million home, if I can get a 4.5% rate for that first year for only $16,000 of a seller credit, that's a bargain.
Yeah.
Don't you think?
Yeah, definitely.
So that's one of the ways that we're using some creative financing to get into lower interest rates. Another thing that I'm using a lot right now are adjustable rate mortgages.
Oh no, that's a bad word. Don't say that. I'm kidding. Adjustable rate mortgages.
What are you in 2008, Jeremiah?
Exactly.
This is 2025, my friend. These
Uh,
are not the adjustable rates of
2008.
2008.
Yeah. Yeah.
These are great products. It's not a teaser rate. These are fixed mortgages, amortized over 30 years. There's no balloon payment. They're fixed for the first, depending on the term of the adjustable rate mortgage. They're fixed anywhere from 5, 7, or 10 years. Those are the popular ones that we're seeing now. So they're fixed for, if it's let's say a 7/6 arm. That's a pretty common one right now. It's fixed for the first 7 years, becomes adjustable after the full 7 years, and then can adjust on a 7/6 arm. It can adjust every 6 months after. We're seeing those adjustable rate mortgages. Those rates are in the fives. So some days they're even in the low fives, right? And then you've got, on those temporary buy downs, you have a lower payment for the first couple years. On these adjustable rate mortgages, you've got a lower payment for 5 to 7 years. Now, those adjustable rate mortgages, where maybe you're in the 5.5, maybe we can get down to the low fours, or I'm sorry, the high fours, with some seller credit. So I'm starting to play with those adjustable rate mortgage and buying down those rates, because then you're buying them down from 5 to 7 years, depending on the terms of the mortgage, and we are able to get into those high fours for
those 7/6 arms are really great right now. I know that the agents hear me talk about them all the time. The average person doesn't keep a mortgage for 30 years anymore, right?
Absolutely not. And especially right now, with everybody talking about, rates are going to come down, rates are going to come down. It's going to be a gradual process, but I do believe that they are going to come down from where they are right now. Do I think it's going to be 12 to 18? Maybe, but I think it's going to take a while. And that's why these adjustable rate mortgages that we have right now are so great.
Mm-hmm.
Because why are you getting into a 30-year fixed mortgage when you're sitting here telling me you think rates are going to come down? If you think rates are going to come down, why are we doing a 30-year? Let's get into those adjustable rate mortgages, get the best rates that we can right now, with knowing we're probably still going to refinance that into an even better rate, right?
Yeah.
Yeah.
And if you're old like me, you know that back in 2008, 2007, those adjustable rate mortgages, a lot of them were only fixed for 2 years. There was prepayment penalties on them. They were really negative amortization loans, all these things that were really negative. They're not like that today, right?
They are not like that today.
Yeah.
Absolutely not. They are. I get excited about the arms of 2008 scared everything out of me. They were terrifying loans. They didn't make sense. They had a whole lot of risky features. They were very scary. The adjustable rate mortgages of today excite me. They're great products, very, very safe. I love to talk about them.
The same. That's really what we want you to know.
We can talk about it all day long.
Don't be afraid of the adjustable rate mortgage in today's world. It's not what it was 17 years ago. That really led to a lot of the Great Recession stuff. So, thank you, Amie, for sharing some strategies, the 2-1 buy downs, the 3-1 buy downs, the 7/6 arms, all great programs to help save people on monthly payment. So thank you for sharing that. I do want to switch gears a little bit though, and really just get in to asking Lily a little bit more of a personal question. She's helped thousands of families move in her career. And I know that she shows up to work happy every day. But Lily, I have to ask you, what do you really love most about helping buyers find homes?
I love most is helping the buyer find a home. For some buyer looking for their start a family, happy life, raise their kids. Many house become their forever life, the home. Number two, I'm really happy to see all those customers. They bought a house, even they change their life changing to different location, different goal for more bigger house. They have a family member increase more, so bought a more bigger house. I'm also very happy to help them find the people retired. They raise their kids grew up, moved to a different place. They want to come into the retirement home. So all of those for their lifetime, big turning point. And I become a wonderful participant, helper to help them make a decision, have that very good dream home for the happy life. I feel like this is very important for me, very important for my client. I'm very happy to do so. Each time I help one new customer to buy a home, just like the first time I bought a home for my first customer. So I'm very happy, very excited. That's part of my life meaning as well.
Yeah. Well, thank you for sharing that, Lily. And I am very lucky to be able to see that every day and work with you on that stuff. So I know that that's true. Thank you for sharing. You know, it's really buying real estate, Lily, is really a wealth building opportunity for people out there, right? So
Yes.
even in this market that where affordability seems to be a really big issue, do you believe that 10 years from now, Lily, real estate will be more expensive or less expensive than it is today?
Oh, for sure, more expensive. You can see the history.
Yeah.
History can tell the future, almost for sure. So if you're buying a house, don't hesitate. Buy now.
Yeah. I think we always say in the office we have a saying, the best time to buy a house was yesterday. You know, it's always a time in the past because over time, real estate has shown us it goes up over time because in the US, it's an inflationary market. We always have inflation. Inflation is never zero, at least that I've ever seen. So it's an inflationary market, means the cost of labor always goes up, the cost of goods always go up. The replacement costs go up, which causes real estate to go up, and the value of the dollar depreciates as well. So over time, because of inflation. So thank you for sharing that. Really, just wrapping up on a couple of key points here, and then I want to, if you have any questions, put the questions in there. There was one in there that I'm going to answer in a second. But if you have any questions for this, please type them in, and we'll get them. We'll ask Lily, and we'll get them answered. But just to recap, now is really a great time to buy if you have the right guidance, right? So you need to work with somebody like Lily and Amie to have that proper plan to get into a home and having insider access to information. If you weren't getting it before, if you're working with another agent and they're not giving you insider information, please give Lily a call or her team a call to get access to that insider information and then partner with a lender like Amie that provides smart and flexible financing options for you. I just want to go answer this one question really quick. I had mentioned earlier in my market update that Fountain Valley was leaning towards a neutral market, not really a buyer's or seller's market. It actually is a little bit of a seller's market still, but patience are there. Pricing is crucial, right? Real estate price, and I've never seen anybody better. I've been in this business for 20 years. I've never seen anybody better at pricing strategies than you, Lily. You really study the market a lot, and I've always admired you for that. So I think that's really great. Somebody asked about Huntington Beach. Huntington Beach, still a very similar situation to Fountain Valley. It is a slight seller's market still, leaning towards that neutral market. Our average days on market in Huntington Beach is right around 70, 74 days. That's still technically considered a seller's market. Once it starts getting 90 days and above, that's when that neutral market really starts to hit. Just to kind of say for all of you buyers out there that think because 74 days or 70 days on market, I heard an analogy once, kind of as we went through COVID. It was average days on market in 2021 was 14 days. We were literally, if the speed limit was 65 miles an hour on the freeway, we were going 150 down the freeway. Well, today we're going 65 miles, and we might be going 70 miles an hour on a 65 mile an hour freeway. We've just slowed down from warp speed at 150 to 70 miles an hour. It is a pretty stable market. It's the most stable market I've seen in 5 years in regards to that, which gives buyers options in in the out there in the marketplace. So you have time. You don't have to jump on the first thing you see. You can sometimes be a little bit patient. But Lily, you're still experiencing houses with multiple offers, right? Listings with multiple offers.
Yes, I still do.
How many on average, how many, because you're the inside selling a listing agent, typically on most of your houses, how many offers are you getting for those are really great properties?
Before more, now probably I would say 4, 5, 6, 7 still happen. Some happen is 10 or plus, even just recently.
Yeah, those houses that are, I will say, what type of houses are those? To ask you, what type of houses are getting those 7, 8, 9, 10 offers versus the ones that aren't getting multiple offers?
Has to be priced really right, just on the market price, not too high. So usually customer let me make decision. What's the market price, listing price? The result I will sell much higher. So some house and the probably price if a little bit higher end will be less competition. That's the situation. It just depend on price, asking price.
So that's why you have to, as a buyer, you have to be prepared. You have to work with a great agent that understands the market. And if you're working with Lily or one of her team members and they tell you this house is priced really, really well, they know what they're talking about and it's probably going to get multiple offers. So just work with an expert. I highly recommend Lily and her team. And I want to say, I'm going to put their contact information up in 1 second, but just kind of in closing here, if you're planning to buy a house in the next 6 to 12 months, really the smartest thing you can do is start early, start the conversation early, get prepared, work with a great loan officer like Amie, and they can help you build a plan that really fits your goals, but be prepared when that right house comes on the market, because new houses come to the market every day and you never know, tomorrow might be the day your dream house hits the market. So you need to be prepared and give Lily and her team a call just to really put it up and show you Lily's team. This is everyone on her team. If you wanted to take a picture of that, if you're working with one of them now, thank you very much. Continue to work with them. They will guide you in the right way. But just in closing, Lily, is there anything that you want to say?
Thank everyone coming here, and wish you buying a house soon. Okay, contact with my team, the agent you already know. We can call me. Okay, we can start to discuss the strategy, how to help you find a good house.
All right. Well, thank you everybody so much for signing on tonight, being a part of this. If you have more questions or you want to set up a private consultation with Lily or one of her team agents, please reach out to them directly. Be prepared, be smart about that investment that you're making into real estate. But most importantly, please make that investment into real estate. It will not let you down over time, I promise. Thank you very much, everybody, for listening in. Really appreciate it. Have a great evening.
Thank you.
Good night.
Good night.
Good night.